Hello everyone, welcome to Bald Guy Money. I am Bald Guy, and this past week was a very interesting one. We saw gold fly up to $2,432 per ounce during US trading hours on Friday before being stomped down, or monkey hammered, as Mark on my Patreon likes to say, to our closing price of $2,343 per ounce, which was still a minor gain for the week of about $14 per ounce, making it 7 up weeks for gold out of the last 8, despite that strong price rejection on Friday, which gives us more confirmation that gold is in fact in a bull market right now. Now, moving to silver, here's the chart here. It was up about 40 cents per ounce on the week, but also got stomped down hard from its Friday intraday high of $29.79 per ounce, just like gold did, but we are most certainly knocking on the door of $30 silver right now. With a medium-term bull market case still fully intact, as we've closed 6 of the last 7 weeks in the green on the price of silver. Now, switching back to gold, and we will be bouncing back and forth a bit between the metals in today's video, because this video was supposed to be about real estate and metals. But you all asked me for market signals, so I have had to change the content of this video basically overnight, because as I was preparing for this video on Saturday, I was saying to myself, this is probably the place where we'll see a price correction. And I was fully prepared to come on here and say that. I was thinking we're going to get some consolidation at this point, some sideways to downward movement in the prices of metals. And I even wrote on my Patreon last night that without a catalyst to move us back up, we will likely test price support on gold around $2,280 to $2,300 per ounce. And this image here is something similar to what I shared late last night, my time on Patreon. And under that post, I was asked by a patron named Joe. I don't want to give away his last name, by the way, here. I don't have his permission to do that. But hello, Joe. Thanks for your question. He asked if we'd see silver dip with gold. And I was prepared to tell him definitely the answer is yes. Silver should follow gold on the way down, even to a bigger extent, because the patterns we had put in on the daily candles for silver were a lot more bearish for silver than they were for gold. And silver is typically much more volatile than gold, and we've established that in past videos right here on the channel. And you can see I marked on the chart there that we got what's called a topping tail, meaning a big price rejection plus a bearish engulfing candle. The bearish engulfing candle doesn't have anything to do with the topping tail, but that is just what we got in the chart for that day. And the bearish engulfing candle is something that actually ate away all the gains of the previous day, and this is often a very strong price reversal signal. So both of those signs, when added together, number one, the topping tail with the high skinny line, the wick coming out of the top of the bar, and the price rejection down, as well as that reverse engulfing candle eating all of the previous day's gains. That was a very bearish signal for silver, and definitely what was leading up to, in my opinion, a buy the dip opportunity. But an analyst can't rely on technical signals only, and a good analyst has to be able to change his or her mind when new data becomes available. A great example of that is what happened a few weeks ago when technical analysis was signaling a pullback for the price of gold, and we actually got a 2-week price pump that I talked about leading up to it. So that's what I want to cover in this video, starting with why I changed my mind on metals, going from basically neutral to bullish literally overnight. And before this video's viewer question, I want to talk about what I am buying right now. I am buying something right now while the markets are closed, and I will reveal that later on in the video. Now, just before we get into it, if you're in the United States and want to buy gold or silver at a great price from a dealer that you can trust, please check out channel partner Pimbex, who still has these beautiful Silver Morgan rounds from the Regency Mint for below $30 a piece if you get 100 of them. And if you think silver is going above $30 soon, I'm sure you can do the math on this deal. So I will leave the link to this offer in the description below. And if rounds aren't your cup of tea, or if you're looking to stock up on gold, check out their website at pimbex.com to see just how good their prices are. Just please remember to tell them you came from Bald Guy Money. So, as I said, this video was supposed to be about real estate and metals, and I had a whole bunch of content ready to take you all through when I went to bed last night. But when I woke up in the morning, well, sadly, I woke up to this. Yet another negative geopolitical development involving war. And I don't want to get into the politics of this one. This is not a political channel, and I don't cheer on war here because I know too many people who have seen war, young men, and it's nothing to be cheered for. But what happened last night between Israel and Iran was definitely an escalation of this growing rift between what we traditionally call Western countries and their counterparts, that being China, Russia, and Iran. And some people like to say it's West against the BRICS, and I tend to have a more nuanced view of that situation. But at any rate, whether this escalates into full-on war, which I pray it doesn't, or it fades into our memories as a coordinated response from Iran for what happened to their embassy in Syria so they don't appear weak, in a scenario where they informed the USA in advance that they would do this so Israel could shoot down all of the incoming missiles and drones. And believe me, I've lived in the Middle East long enough to know that is a real possibility. But again, no matter what happens, I expect the market to react to this event because uncertainty of this scale causes people to seek safety. Especially in an environment where inflation is going back up again. And the reason I say this is part of the equation is because war always results in more inflation. It doesn't matter how high interest rates are, if the USA or any country for that matter is going to fund war, whether it's one they're participating in directly or a proxy war fought by other people in foreign countries for them, the money printers will push more money out into the market. And we can see that much is true when we look at US government spending and ask ourselves, why is inflation going up again after what the mainstream media called unprecedented interest rate hikes? I mean, it's not as if consumers have tons of disposable income that they can spend on whatever they want right now that's driving this inflation up. Just look at the latest CPI data showing a steady drop in the prices of used cars. And I like this indicator because it's a domestic US market indicator, more or less. These are cars that are exchanging hands from American to American. This indicator is less reliant on the strength of the US dollar, so import prices. So this is a very American domestic indicator, and that's why I like this indicator. And it tells us, at least from my point of view, how much disposable income people have to spend upgrading their lifestyle. Because when many people were getting the C-19 money for staying at home and day drinking, the price of used cars ballooned, if you all remember. Not only because new car production had been disrupted, and that was the narrative in the mainstream media, that was only just a small part of it. But it was mainly because people had money to spend. And let me add, before we circle back to metals and I tell you all what I'm doing right now, that consumers with money to spend do not default on their credit card payments, something we are seeing more and more of right now, as you can see here on this chart from the Federal Reserve. With all stages of credit card delinquency, those being 30, 60 and 90 days past due on your credit card bills, they're all on the rise, which is probably just one of the reasons why we're seeing the stock market rally stalling out right now, as you can see here on this chart of the S&P 500, which put in one of those reverse engulfing candles 2 weeks ago and has since broken down further and closed below what had been a technical price support level for the previous 3 weeks. So when we put all of that together, meaning more geopolitical issues pushing investors towards risk-off investments, and some central banks away from certain currencies they hold in reserves, I see the market being pushed towards gold and silver. That push to metals is also being driven by persistent inflation, much of which is being caused by funding wars with money that doesn't exist, money they're not taking in tax revenue, so it gets borrowed into existence, making investors and central banks want to hedge against the risks of devaluing currencies. And finally, with the US stock market possibly topping out right now and the US consumer becoming a larger credit risk to the market, that too will push some investors to safety. And by the way, that's not even mentioning lingering issues with bank solvency due to the depressed value of bonds that they had been purchasing over the last 12 years, as well as commercial real estate default risks. Both of which I have covered here on YouTube before, and although they're not listed here, they remain major issues that could push metals way up if banks start to go under, just like we saw in March of last year. And that's why what happened yesterday between Iran and Israel, again, although it may not escalate, I hope it doesn't, and to be honest, I don't think that it's going to escalate. That event adds another layer on top of it all. And I'm expecting this to materially impact the price of metals over the next 2 weeks, and I am expecting to see a return to the prices we tested on Friday because I think the market was starting to price this in, and potentially there were some computer trading algorithms that picked this up too before somebody said, okay, this is getting out of hand, and sold a large paper position. Let me know, by the way, in the comments who you think could have sold a large paper position, pushing the price of metals down last Friday. But based on that assumption, with a probability slightly lower than my last 2-week price prediction on gold, I think we'll see a 7% increase in the spot price of silver and a 3.8% increase in the spot price of gold, which makes my decision on what to buy right now much easier. And that is why I am going to follow that purchase of gold from 2 weeks ago with a purchase of some silver this weekend, meaning today at these prices. And I am using some dollar cost average money I have set aside for a silver purchase. So it's not like I'm going to my bank account and wiping everything out and going all in on silver or aping out or whatever other crazy things people say they're doing on Reddit. This purchase was planned and I was just waiting for the right moment to make it, and I think now is that moment, despite some of the more bearish technical indicators I showed you earlier in the video. And now on to this video's viewer question. And just before I read it, I want to say that this video was really made possible by your feedback in the comments, as well as some of the discussions on my Patreon. Hello, Steve. You gave a great question that actually inspired me to change the entire concept for this video. I want to thank you for that comment that you gave on Patreon, as well as some of the discussions that I saw happening in the Discord. So please remember in this video to show some love. Leave a like, leave a comment if you like seeing me make videos on these price signals. What I think is happening on the market, let me know in the comments so I know to continue delivering this content that you think is important to all of the Bald Guy viewers out there. And one last thing, just before I read this question, I just want to say if you want to participate in those Patreon discussions, if you want to see the additional content I'm putting out there, as well as access to the Discord group within which I'm active and chatting in every single day, remember that your last chance to join the Patreon at the current prices is basically this week. After this week, I am going to be raising the prices. And if you want to lock in that price for a longer time, the discounted price for the 1-year membership is probably the best way to do it, because that level of discount is also going to disappear after this week. Now, for this video's viewer question, it comes from Shining Bright. And they asked, how is buying gold risky? Gold is money. Everything else is credit. And it's a fantastic question because I hear this all the time, especially from the crowd that says it doesn't matter what price you pay for gold and silver. And although I truly believe gold and silver are money, the fiat price you pay for it absolutely matters. And that's why I try to find entry points, and I try to be as smart as possible about what I choose to buy instead of letting my heart choose for me. Now, since this question was about gold, let's take a look at a gold chart starting from January 2008 to today. And yes, we are nominally well above where we were in the 2011 blow-off top that you can see here on the chart. But as you can see, there was an extended period of time after that blow-off top where we settled into a lower trading range. And although I said in a recent video that we are likely only a couple years into a longer term trend for gold and silver, blowing all of your fiat to go all in on something that's at an all-time high price is not the best way to approach metals, especially since this is such a long-term game. And that's why setting aside a DCA budget and choosing moments before expected moves is the best way, at least from my point of view, to buy gold and silver. And that's whether your intention is to hold it to pass it on to your family in the future, or if it's to hold it just for many years in order to use it later on to fund a real estate purchase when the right moment arises. Because when it comes to risk, everything comes with risk. There's no such thing as no risk. Some risk is high and some risk is low. And I have a few $40 silver coins in my stack as a reminder of that fact. So if you're in the metals game for the long term, yes, the risk is very low. I agree with that. But that doesn't mean there's no risk at all. There's still some risk there. And many stackers who went all in on metals in 2011 felt the frustration and reality of that risk between 2012 and 2020, and understanding that fact will make you a better stacker. And for those of you who are planning to trade hard asset for hard asset, meaning that you're planning on using metals at some point to purchase real estate, remember that I have a tool on Patreon you can use to time that. I will go into more depth on that topic on the YouTube next week. At least that's the plan, because that's what I had planned on doing this week, to show you all kind of where metals stands versus real estate and the opportunity that I see coming there. And I will do that next week unless something derails those plans. But you can get access to that tool right now, again, if you join the Patreon. With that said, that's it for this video. I thank you all for your continued support here. We're growing at a rapid rate here on Bald Guy Money, so thank you all for liking my videos, commenting on my videos, submitting your questions for the viewer video viewer question of the week. Oh my goodness, I massacred that. Anyways, I just want to thank you all for your continued support. Thank you all so much. As always, I'm wishing you all a fantastic day ahead. Take care of yourselves and take care of each other. Goodbye.